I'm with Jing Ulrich, who is the chairman of JPMorgan Global Markets China. And who better to ask about the outlook for China? Jing, really the discussion has been whether it's going to be a hard landing or a soft landing. Now, what's your view?
Well, I think the macroeconomy can achieve a soft landing. The central government has shifted its macro policy from fighting inflation to supporting growth. So there has been a distinct change in government policy. You're seeing monetary easing, you're seeing some fiscal support in the form of tax cuts. So I think we can manage a soft landing. However, for investors, one needs to pay attention to sectors and companies. Will all the sectors and all the companies fare equally well in this transitional period? That's a big question.
Well, what's the answer?
Well, the answer is some of the sectors actually may end up with a hard landing in terms of profits. Other sectors, such as consumption, services, will do very well. So it's very much a mixed picture.
Well, what about the housing market? I mean, is there a chance that we're going to see the restrictions on housing sales withdrawn?
Well, you know, at the macro level, in terms of policy rhetoric, it won't change in the immediate future. However, at the local level, you're seeing provincial governments, city governments already beginning to ease some of the policy.
Well, if we see a soft landing, then what would that mean in terms of economic growth in China?
Well, this year, the central government is forecasting 7.5% growth. However, most of the analysts and economists on the street are looking for 8% plus growth.
Right.
So I think the first quarter this year will have slower growth, perhaps below 8%.
Would that prompt further stimulus then from the government, and if so, how?
Well, that's right. We will have some stimulus coming up in the second half of the year. However, this time around, the policy stimulus will be much more nuanced, much more steady, rather than being used as a more blunt instrument.
So you're saying that there's not probably much chance of overstimulus for the Chinese economy. I'm just wondering what that means, though, for the government's efforts to rebalance away from investment spending towards consumption.
Well, that's right. Yeah, so we're seeing structural tax cuts. The central government is reducing taxes for the service industry, such as logistics and transportation. They're reducing income tax for households, especially lower income families. So because of these policies, in the second half of the year and into next year, we will begin to see consumption and services accounting for a larger share of GDP.
And what does that mean for the commodities supercycle? Is it over?
Well, you know, we have to distinguish between cyclical trends and secular trends. If you look at the overall commodities market, it had done very well after 2009, 2010. Now, in the recent months, we're seeing some profit taking because people are looking at a deceleration in the Chinese economy. Here, we need to differentiate between the different types of commodities. Where China is short, investors need to go long. By that, I mean where China is deficient in terms of resource endowments, you still have good long-term investment opportunities.
And what commodities are you thinking about specifically?
First of all, energy. In terms of oil, China imports a lot of oil, 55% of domestic requirements imported. Number two, copper. 50% of copper used in China is imported. Number three, coking coal. This is a key ingredient for steel making. China is also very short of hard coking coal. So these are the commodities China actually needs for the longer term. And finally, agricultural resources. The country is short of water, so soybeans and corn will also do very well.